Good morning. Hi, it's Mary Ellen McGonagle, and this is the MEM Edge Show. And this is the show where we put you in front of where the action is in the markets, always with an eye toward capitalizing on that action. And we certainly are seeing a lot today. Unfortunately, it is on the downside, but we still have quite a bit that we can go ahead and review given the broader markets and what's going on. So the first thing we are going to do is go ahead and take a quick look at the current markets and where I feel that we are relative to historical precedents and going forward. So we will take a look at the current markets. And then secondly, defensive stocks that also have growth prospects. So given the current market environment, you will want to, at the very least, have a watch list of stocks that are a bit more defensive in nature. But I'm going to go ahead and take us through and look at stocks that also within that defensive realm, these stocks have growth prospects. It's not just the yield and the defensive nature. So we'll go ahead and get into some of those stocks and uncover how you can uncover them as well. And then earnings scorecard. We do still have over 300 companies due to report earnings this week. We'll take a look using historical precedent during this current earnings season and take a look at some candidates and stocks that I think you should have on your watch list. Earnings has been a very, very vibrant mover of stocks despite the downward pressure on the broader markets. We've seen the biggest movers over the last 4 weeks have been those stocks that are either coming in ahead or below their earnings. So we'll take a look at some stocks that are due to report this week. Lastly, uncovering next cycle's outperformers, and this is with an eye toward developing a watch list that you can have on hand so that when these markets turn decisively and decidedly positive, you will have an action list. So let's go ahead and get started. The first item here we are looking at is a weekly view. This is the SP 500 Large Cap Index, and I've marked it up quite a bit. But what I did want to point out to you are some of the indicators for those of you not familiar. So on this weekly chart, this red line that in this period is underscoring the price, this is your 50-day simple moving average, quite simply a smoothed out line of the price history over the last 50 days. And then the blue line is your 40-week or your 200-day simple moving average. Again, price history over the last 200 days. Both of these are really quite effective as far as moving averages for your broader indexes. And so the first thing we can key in on here is going back to this October period, that break below that 50-day simple moving average, your first warning sign, but we did go ahead and subsequently break below that 200-day simple moving average. So now these areas that were once support, these moving averages, are now acting as resistance to the upside. But we did break back up above that 200-day simple moving average last week. We may be negating some of that certainly with today's action, but that was your first area of possible upside resistance. And then from there, your 50-day simple moving average becomes your next possible area of resistance. We will want to see a break back above both of these key simple moving averages to get truly bullish on the broader markets. And then on top here, we have what's called RSI. This is your relative strength indicator. And you ideally would like to see this RSI line above this net neutral, this dashed line. So we're certainly heading north. We're going in the right direction, but we're not quite there yet. And then these down below are what are called stochastics, another momentum indicator. And the stochastics going up, black up line up through the red, that is constructive. But here again, we want to see the stochastics trade up above this 50, this net neutral. So what I've done here is gone back historically, taken a look at the picture, if you will, during other correction. So this is the 2016 correction, the beginning January, we had a sharp correction, but I'm pointing you toward the recovery. So we had that stochastics back up through this net neutral, in line with the price breaking back above both simple moving averages, and your RSI trended positively. So these three signals were the green light. The markets then went on for a nice advance. Then we had a pullback pre-election, pre-Trump election. The markets pulled back sharply. Again, we're looking for that stochastics up through the net neutral, price up above simple moving average, in line with that RSI. And then more recently, the earlier this year correction, that February period, the reversal out of that correction, same phenomenon, stochastics turning up positively, tuned in with the RSI trending upward, and your price back up above simple moving averages. So that's where we are now. We are very well maybe in the early stages of a reversal recovery, but certainly have more work to do. Let's go ahead and take a look at the Russell 2000 small cap index, and this is a daily price chart. Pointing this out because the small cap stocks do have a way of leading the markets both to the upside as well as to the downside. So it is definitely worth staying on top of. We can see the earlier correction here in February of this year, and the Russell 2000 was in fact the first area to really turn positive and pull us out. And then on the flip side, the small cap stocks did start breaking down. This is September, while the broader markets were still holding up quite well. And of course, we do see a continued just downside action into October as the rest of the market fell into a correction. But more recently, we are getting a sense that the small caps were attempting to reverse this downtrend. Unfortunately, we had a down day on Friday that erased the gains from the rest of the week, and today the Russell is down again almost 1%. So not particularly constructive, but an index that you will want to stay on top of and keep an eye out for. Now let's go ahead and look at the broader markets. And as usual, what I've done here is used a feature on stockcharts.com initial interface page. It's called Candle Glance. And basically it's a thumbnail shot of 12. It could be stocks, it could be indices. It's something that you can populate. And I have gone ahead and done that. I put the broader market indices, the SP500, the Dow, the Russell, the NASDAQ. And I've interspersed some of the larger sector funds. So we have healthcare is in there, consumer staples, technology, as well as we also have the VIX is in here, financials, and so on. So what we can do is go ahead and add an indicator once you've populated that list. And in this case, I've added the RSI, that's that relative strength indicator. This is a momentum indicator. So I'm trying to get a feel for performance relative to its peers, sorted that by descending so that we are getting strength to weakness. So let's take a look at where we stand with the broader markets as well as these select sector ETFs. And we can see that immediately on the upper left, your strongest is consumer staples stocks. And of course, that makes a lot of sense. We are still in a period of quite a bit in the way of volatility. People seeking defensive stocks can go into staples. And then from there, healthcare. And this is an area I talked about where we can actually both staples and healthcare. Both of these are areas that are not only defensive, they also have stocks that are growing. They have sound fundamentals as a backdrop. So that is really a nice double barrel, something that would really benefit you if you are inclined to trade in this uncertain period in the broader markets. From there, we go to the Dow Jones Industrial. And prior to today, this index had broken back above both of these key simple moving averages in a bullish move. We're seeing a lot of blue chip, whether it is consumer, healthcare stocks, really helping the Dow to the upside. Financials are trying to come on. They are the third or actually the fourth strongest and so forth down. We have discretionaries. The NASDAQ is suffering. Take a look at this next to the last, because this last is the gold, gold spider, gold shares. But the weakest sector right now is technology. And that is not something that you want to see if, as we are on the prowl for the market's recovery. Technology is the largest subsector within the broader markets. Also, a lot of heavyweight names in there that are really a lot of eyes on there. So we are seeing Apple dropping, and that is pushing the NASDAQ as well as the technology sector, because a lot of suppliers to Apple are also coming out and lowering their guidance because of the possibility of lower iPhone sales. So this is the current snapshot here. Now let's go ahead. What I've done is gone ahead and provided you with the sector snapshot as of the close on Friday. So what we're looking at here is a 1 week view. So last week, we actually did have quite a positive day on Wednesday, certainly subsequent to the midterm election, super strong rally. A lot of that did fizzle toward the end of the week. Thursday and Friday were indeed weak. But this is your weekly view. The reason I'm pointing this out to you is because I wanted to point out and highlight the fact that the markets were very much in a defensive mode despite the euphoria following the midterm election. So healthcare sector was up 4%, real estate 3.7%, utilities and consumer staples. So all four of these are viewed as defensive. They offer higher yields, and an area that those investors that need to be fully invested can feel more safe, if you will, within. So I talked about the ability to go ahead and then drill down within a given sector so that you can uncover candidates that could fit criteria of having growth, having technically sound charts, so that you can potentially take advantage of the move into these areas. So the first area we are going to take a look at is healthcare sector. So what you'll want to do is on stockcharts.com, from the initial page, there is a sector view that you can go ahead and access. So I'm going to show you quite quickly. You go down to the report and analysis sector summary. And then from here, you can do it intraday, but certainly it can be helpful for the 1 week view. That's going to give you a little bit of a longer view. And then now we can go ahead and click onto that given sector. So we're looking at healthcare. We're looking here now at the subsectors within healthcare. So it's been subdivided down even further. Healthcare providers, pharmaceutical, medical equipment, medical supplies, and biotech. So what I have done subsequent to that is gone ahead and used that candle glance view again, using those subsectors that we just spoke about, because really you want to be in areas that are withstanding the downtrend in the broader market. You want to be where the strength is. So we have that RSI in there, sorted again by by descending order, RSI. And let's take a look at where the strength is within these healthcare stocks. Now, it will take you a little bit of searching to uncover, but you can easily click on this chart to go ahead and get a bigger view of precisely what it is. And it's listed here. This first strongest area is U.S. healthcare providers. Take a look at this big gap up here. This was all about the midterm elections, and these providers were in fear of having to reduce their services and their client base in the face of Obamacare potentially being removed. But now with the gridlock Congress, this fear has subsided, and these healthcare providers really gapped up. They're really holding in strong, and we will drill down into some stocks within there, because these stocks have very, very sound and strong fundamental backdrop. They also were trading well going into the election, unlike other areas of the market that really got hit hard. So we are going to look at healthcare providers. From there, your second strongest group is pharmaceutical, and this is going to be a lot of those big pharma stocks. This is another area where there was fear that the drug prices would be mandated to reduce, but now with that election, that fear has subsided. So pharmaceuticals is another strong area that you can search in for stocks that are more able to withstand downward pressure in the broader markets. This is the XLV, the healthcare sector itself, but then to the right of it, the third strongest, this is your medical equipment. And what we can do here is take a look at this chart. It's certainly not as healthy as the other two, but it is attempting to reverse a downtrend. Another view that we can look at, that's a daily chart. We can go ahead and take a look at a weekly chart of these medical supplies. You can see that this is what you'll find within a lot of the stronger underlying stocks in here. They've sold off and they are experiencing a fairly nice bounce back with a little bit more work to do. And then from there within healthcare strength, the biotechs are showing up rather weak. We've had pockets of strength in there, but overall biotechnology stocks are weak. And then your last is the medical supplies. So those are your 5 subgroupings. The medical supply list really is not healthy at all. So you can see the significant difference. So with that, we are going to want to focus on those stocks within healthcare that are in the managed care or in the healthcare providers, pharma as well. And so your best way to go ahead and access that is to go ahead here. We're back into this subgrouping sector, and we can then click on to healthcare providers. That was your top listing. Now we have a list of those stocks. Again, I have it sorted currently by weekly performance. This is going to give you a really clear shot of where the strength is. But from here, why don't we go ahead and sort it by this scooter, SCTR. This is a technical indicator that's really going to point you toward those stocks, again, that are withstanding the downward pressure. You want to be in these stronger stocks. And from here, we can take a look. I tend to like larger cap stocks. They're going to be less volatile, more liquid. So the very first name within that we can go ahead and take a look at is HCA Healthcare. HCA is the ticker. So let's take a look. I like to look at stocks that are hitting a new high in price in the face of a broader market that really is struggling. This is showing superior strength in the face of weakness, but also we can go back historically when we see stocks that have these gaps up. This is the end of July. HCA came out with very strong numbers. The stock market liked it. It gapped up. So there is strength. There's a fundamental backdrop. This is their most recent quarterly earnings, and you can see the stock reversed this downtrend. Take a look at the big volume. Institutions came in, they like it. The stock turned positive. Now, all of this positive action occurred well ahead of last week's election. So we really have some nice tailwinds here in the way of strong earnings, as well as the subsided fears of less coverage. So we can go ahead back again and take a look at some of the other names that are in here. And this actually is a smaller name, but AMED is another stock. This stock was a big winner, and it was very strong going into the September period. It dropped in line with the broader markets. Again, attempting to reverse. I would like to know more about their numbers to see if there is substantial growth in the forecast so that it could continue to advance higher. Now, we talked about that is the healthcare providers. Let's go ahead and take a look at the pharmaceutical stocks. As you may recall, this is the second strongest subgrouping within healthcare. And so now we're looking again at a 1-week view. These are the performers. And we can then go back and take a look at the scooter, SCTR, and you can see a lot of well-known pharma stocks up here in the forefront. Let's take a look at Eli Lilly, LLY, one of the larger names, and take a look at this. The stock is up 2% today in the face of a very weak market. And overall, the stock held in remarkably well given the deterioration within the broader markets. It was able to sustain a presence around its 50-day simple moving average, very bullish. Now we're having this upside action in response to the midterm election. This gap up here at the end of September was earnings related, so we have that fundamentally sound backdrop. So this would be a very prime candidate for those of you looking to get into the markets despite the uncertainty on the outlook. And then one other name that we can take a quick look at is Pfizer, PFE. And here is another stock that sold off a bit with the markets, but overall held in fairly well given the dynamics going on around it. We can see this price up on that midterm election, but here's another one. It's up over 0.5% today, again, in the face of a tough market. So that is the healthcare. Let's go ahead. I talked to you about the ability for you to also capitalize on some of these consumer staple stocks. So what we are going to do from here is it's the same exercise where we go ahead and click on to the consumer staples group name, sector name. From there, we are going to be sorted by performance. This is the 1 week performance. And you can see that quite a bit of strength in food products, soft drinks. There was a lot of action around that last week. So let's just drill right into this food products area and take a look at some of these names. Again, sorted initially by percentage performance over the week, but I'm going to go ahead and sort it by that scooter. This is that technical indicator. The higher the number, the better as far as technical soundness, stocks that are outperforming. And we can see a number. These are names that I've highlighted in my weekly newsletter, but also I've been talking here about them over the last several weeks. So what we can do is just take a quick look at some of these stocks, and I think you'll be pretty surprised at how they are really just ignoring the dynamics going on around them. This is LANC, Lancaster Colony. Take a look at this strong uptrend. The company came out with strong earnings. They are expanding their product lines to meet an expanding taste in consumers as their taste shifts. We can go ahead and take a look. I'm going to sort it again by this scooter, and we can take a look at some other examples. This is Lamb Weston, another company that reported strong earnings. Take a look at this uptrend. I don't have it noted, but all of these companies are going to have yields in the 2% range that are also going to make them attractive. I'm sorting this again by scooter, and we can take a look at Hormel Foods, HRL. This is another stock that did come out with strong earnings. Take a look at the RSI. It's trending and is very positive. The stock is currently getting a bit overbought as it gets up above that 70 on the RSI, but your MACD down below, we have that black line up through the red. Very, very constructive, very positive. Stock is finding support at an upward trending 10-day simple moving average on the daily. But again, this is another company that is expanding their product line. They've purchased 2 outside brands and brought them in, and there's a lot in the way of growth prospects as well as that defensive nature. Now, let's go ahead back and we can take a look at another subgrouping within consumer staples. And we can take a look at these food retailers and wholesalers. Again, sort that by the scooter, and we can see any number of these stocks that are really in sound uptrends and quite simply are ignoring the downtrend in the broader markets. So those are defensive plays. And again, the names that I'm pointing out to you all have very, very sound, strong fundamentals in addition to that backdrop of being defensive in nature. Let's go ahead and take a look. I talked about earnings season coming up, and we are running down a little as far as time. So what I'm going to do is quite quickly show you 3 stocks that reported last week, just to give you a feel where we are that as far as some of the biggest movers. This stock is ETSY. And take a look at this gap up. The stock was up 24% on the week. It's only down nominally today. The company came out with super good earnings and they got it higher. We can take a look at another winner. But again, just looking last week at those biggest movers, they all were driven by earnings. This is Twilio, another stock up 24%, gapped up on their earnings. And then, of course, there were some downside earnings releases. This is Medifast, MED. The stock came out. The numbers were good, but they guided lower. Street did not like it. The stock was down 24.5% last week. One last one is Coors. And then I'm going to want to show you some options for this week. Coors was down quite a bit on poor numbers as well. But let's take a look at names that are reporting this week that stand to potentially do well. I do not favor trading into earnings, but to trade after they report with an eye toward them gapping up even further. This is PLCE. The analysts are raising estimates going into earnings. You can see it's down here below its 10-day simple moving average, but it's a company that has over the last 5 quarters come in ahead of earnings. Certainly worth paying attention to. We can look at GOOS is another one. These are these retail stocks, and they really are coming on. This is Canada Goose. Take a look at this gap up here on a prior quarterly earnings report. The stock is bullishly positioned. Macy's is reporting this week, and this is also in a bullish place in the sense that it's above an upward trending 10-day simple moving average. And we can take a look at SCVL. This is Shoe Carnival. And most of the names that I'm showing you are, in fact, in the consumer discretionary space, and they are behaving rather bullishly, again, in the face of a weak market. Walmart is due to report this week. Take a look at that uptrend. It's really been amazing. They're doing a lot in the way of being innovative with their delivery service and processes, and they are trying to take over with the collapsed Toys R Us and take advantage of that. The outlook for this year's shopping season, holiday shopping season, is really bullish. The street is really looking for some good numbers. So we can take a look at JWN. That is due to report later this week. And the other thing to point out is all of these stocks, Nordstrom is JWN, they have a 2.3% yield. Walmart has a 2% yield. And so that is certainly worth noting. So Nordstrom reporting later in the week, again, holding up really remarkably well, despite a difficult market around it. And then this week also, the highly anticipated or watched marijuana stocks are going to be reporting. So that could be interesting for those of you that follow that space. CGC, these stocks gapped up last week, again, with the elections as 4 more states. We're up to 32 states that have legalized marijuana. So that could be interesting. And then TLRY is the last name that I'm going to review. They are due to report as well, Tilray in the cannabis space. And I'm going to leave it at that. Please go ahead and visit my website, meminvestmentresearch.com. I'd love to hear from you. Any questions or comments would be very, very welcome. And to everyone, I hope you have a wonderful week trading. Until next week, take care.